Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, pretty red day on Wall Street. It started out overseas, and our futures opened up lower. Market hung out pretty much in a range for a good 90 minutes, maybe even 2 hours. Then broke below it, hit it low, bounced off it into the close. But all in all, red across the board. It's good for some people, good for bad for others. For those that reshorted the test of the broken trend line or back into resistance, you know what you're probably happy with today? You got paid, right? We held up for 2 days, broke below 1975. Maybe you went out short, overnight after, what was it, about a 200 handle off the lows. For me, I just went out flat. I wish I was better at shorting. But I think being out of the way is half the battle. For those in Redler All Access, you saw my disclosures. Again, after playing the bounce last week, pretty much got tactical. On Friday, I was like, you know what? From 1830 back to 1990, chances are, we could hang out here, maybe go a little bit higher to test that 2020, 2040 area, or maybe come back. For me, the calculated portion is over. The oscillator went from minus 90 to plus 20, actually. So to be long, is risky, but if you're short for a retest, you need to have a thesis, those 2 days waiting, and there are guys that are good at that. Or you could have waited till yesterday. We closed on the lows, and you saw weakness in the bios and weakness in some key sectors. So, here we are today, that was then, this is now. You look at the chart here of the SPX, okay? So basically, if you draw a trend line that we've been drawing from the 2011 lows, 2011, 2012, basically it comes up here, and it was pretty, it was pretty symmetrical with, the breakdown of this channel here. Okay, the channel that broke below 2040. Now this channel was 7 months long. Channels are meant to make people as frustrated as possible. It causes some distribution so smart guys can get out of it, and it also wears out shorts. So finally, when the range breaks, not that many people are along for the ride. So again, you look at this trend break. This is an active trend break, an active intermediate spot that broke. You get out of the way if you trade for alpha and you trade for a living. Some guys made some money short. Do you remember we went all the way down to this reflex low, which was, was a nice quick move. That was your disorderly move. That was when people really didn't think what was going to happen. So you had to buy it quickly, came back up, and now, you have us pretty much, in the bottom end of this range now, so not holding up. So the fact of the matter is, if you take a look at the more of the daily chart, obviously, why wouldn't we, try and test, I guess, the lows here? So there are a few things that could happen. We can gap up tomorrow, and everyone who's staying short for a retest of the lows are going to have to figure out whether they're committed enough for it. We could, then gap up and go from red, green to red and push below today's low, or we could gap down and then figure out where we are and if we can get some kind of tradable bounce and see if we get that W, versus the V. And it's been the V that everyone's been used to, for 4 years, and you've had to be fast and furious, and this time, it changed, and markets always change. You look at the chart again, and you will see this morning I showed you the Fibonacci retracements of this spot to figure out what type of commitment it could have to it. Here's your low, here's where it comes up to. So basically, if you take a look here to see whether or not there's commitment to that move, or the speed, it broke to 25%. So if just say it stayed here, okay, and hung out like there, that would have been a very fast market. That would have probably, led to a little bit higher prices. But because it didn't, we broke there, and then if you mapped out today, if we would have opened up not as low, and you had this retracement, which would have been 0.38, and then you would have had your 50, that would have showed some commitment. Instead, you had this bar. It basically sliced through most of last week. So now, coming in tomorrow, we'll have a low of 1903. Okay, 1903 is your low. Okay, this is your other low, and we'll figure out, do we open up and then do an H sell setup pattern and then trade through this low and go lower? Do we open down and then maybe even get a red dog reversal around that 1903? But as of right now, we basically blew through any levels that would have showed commitment to last week's move. You know, if we would have had some commitment, this was your spot. I was looking at this spot actually on the spiders, and I did try it once or twice. You know, but then once the range broke, I was like, you know what? I'm out of the way. I tried it. I actually tried being short a little bit yesterday, but I kind of suck at that. And here was when, you know, you had to close below a prior low. Okay, so that was one signal that we might not just be flagging to go higher. Earlier in that day, it looked as if we could have been flagging to retest higher levels, but we couldn't, and the IBBs and some other sectors told you. But anyway, you know, now here is all we know. Okay, you have this inside range. Do we press up and fill a portion of this gap before heading lower, or do we open lower and then you have this spot, okay, and then you have this spot, and then you have the lows. So got to see how we open tomorrow, right? So write down tomorrow morning, just for those of you that follow me on Twitter, just to give you another clue, like this, today's low is 190.73. Just say the futures are down, you know, 10 handles, and the spiders are trading at 191. I would say S&P futures down 10 handles. Let's see how the spiders handle yesterday's low, the 190.73 pivot on the chart. If you go back to the chart, if we break below it, you know, the next spot would be here, which is your 188.37. You know, I would think if this happened fast, it could be buyable. You know, and then if that doesn't hold, then you have another point of reference at 186.92, and then there's the lows. Okay, and then on the flip side, if the futures happen to be up 20 handles tomorrow, which they could be, I would say futures up 20 handles after closing a little bit off lows. See if the bulls have enough power to push into the gap. Resistance stands at, go back to the chart, you know, right there, which is 194.77, okay, which is basically about, 20 handles. See if the bears, you know, could keep this gap open, or do the bulls push in and fill it, and then we need some more time to navigate these ranges. So, you know, I do put a chart up of the spiders every day for everyone for free, and I talk about them in the morning because then I base a lot of the other trades and a lot of the other sectors and the moves off of it. So anyway, just a little bit of knowledge which could be power for you. IBBs, I gave you a red dog reversal yesterday, which I did show you. Gave you some follow through today. Here was the red dog reversal after a big move off the lows, after a move from wherever this real trade was below 290 back up to retest the head and shoulders neckline. So symmetrical after the fact, right? Remember we talked about the head and shoulders top pattern. Here's the left shoulder, here was the head, here was the right shoulder, and then this was your neckline. Well, look pretty much where we went back to, okay? The measured move was from 400 down to 360. That gave you 40 points lower, which actually went a lot below it. But anyway, from here, what did it do? It retested this spot. So if you were looking to see if it would fail there, you pushed through a prior high, you engulfed 2 days, that was your signal to get reshort the bios. If you shorted here, maybe you covered into this move and then waited for a bounce back, maybe even bought it for a bounce back, and now, you know, this is where it is. So tomorrow, hopefully, we get a down open into this spot and we can see if it's buyable. If it opens up, like I would be like, you know, futures are up 15 handles, see if, you know, the spiders get rejected, I mean, the IBB gets rejected at 339, or does it push a little bit higher to 342? Or if we were down, I would say, you know, IBBs are opening below yesterday's low of 331. There's a spot at 324. See if this is buyable. If this doesn't hold, there's really nothing back until the lows. So again, if then, you know, based on what the market's doing, and that's how you execute, because we trade real time. If you have a thesis, it's different. You know, a lot of people who had a thesis in the market for the past 2 years to the short side probably blew up their accounts because the market didn't confirm it. So in the last, you know, multiple months, while the AD lines deteriorated and you had sectors breaking down, gave you some more clues that finally we could break that range at 2040, get extra follow through to the downside, and you could get paid. So hopefully you were in the game long enough for the market to confirm your short thesis. But anyway, so that's the bios. Qs, let's take a look here. It was holding up somewhat, and then this also. Again, it's so easy when you look at hindsight. You know, you look at the channel here, and all the Qs did is basically retest that broken trend line. So it gave you, if you shorted it, you know, here, you got paid handsomely, and then if you looked and wanted to reshort a bounce, there was your reshort. Yes, it could have went a little bit higher. So maybe, you know, if you were able to be short and take pain, you could have done that into that, or you could have waited a little bit. You could have even shorted today, you know, and it gave you a trade, you know, as that little 15-minute range or whatever the hell, or 2-hour range was broken to the downside. So, we'll see what happens tomorrow. Here's your next point of reference for tomorrow, starting with yesterday's low. Okay, in order to get lower and it opens higher, it has to trade through today's low tomorrow. And then here's your resistance, and we'll figure that out, and we'll trade accordingly. Do we put in a higher low, or does it work its way all the way back? You're not sure. That's why I was very inactive today, because I said to myself, I'm like, why am I going to buy Apple at 110 after it came from 90? It's $3 off the highs. Just the risk reward isn't there. I don't have to be in that trade. I did actually try and short Apple a few times before it broke down. Same thing with Facebook. I'm like, I was buying Facebook last Monday at 77, and it shook me to the bejesus at 72. I'm like, I'm not going to be paying up at 86 when it's so off those lows. I'm just going to wait. Netflix actually was weaker. So if you look here at Apple, basically it had this inside range, and I guess the sellers were looking to break the back of today's range with Apple, and now you have one down day. Okay, that's what I was saying. Like, buying here just doesn't make sense. Where the market's heading lower, I know it could be somewhat of a protective haven or a leader, but we'll see. So that's why I kind of stayed away from it. But tomorrow, into this spot, if we see it, especially quickly, it could be worth a trade for a higher low, or maybe some kind of red dog reversal, with tomorrow's low, 107.36. So we'll see. Same thing for Facebook. Facebook did get rejected at resistance, when it came back up, and what a big snapback that was. And now it's heading a little bit lower. I just didn't want to be a buyer of Facebook right around here, saying, you know what, it's just too quick. Look where it came from. A more compelling area that I think, if we do see it, we might not see it, would be closer to this 83, because at least I know I could trade out of it and not get caught in that mess, because it could have been an acceleration mess, and there was no acceleration in the first 30 to 60 minutes. It actually, markets opened down, came off the lows, and tested both ends of the range for 2 hours, and then finally broke when I went to the gym and I was on the stair machine. But whatever, it's fine. But Netflix, which was weaker, all morning, actually, pulled in a little bit more. Same thing, different areas of the ranges. I was thinking that this is not going to hold here, that maybe we see a little bit more of a move to bigger support, which comes into 100. So this was like an air pocket. So why being in there on the hard air pocket? You could have been shorted, yes, but you had to be, you had to be good at it, and that's that. So we'll see what happens next. Tomorrow you have this low as a pivot, and then you have bigger support here, and then another moving average down there. Banks were horrendous today. They were weak. They never even came back to broken support, and now there's really nothing to work with on that. USO, oil, we said we don't buy day 3, which is good if you use my day count. Day 1, if you're looking for a trend change or some kind of oversold bounce, okay, here is your day 1. If you stayed with it for day 2, you got paid, and even if you sold it on day 2, it gave you a red to green trade on day 3. But you do not buy day 3, especially into broken areas, especially in downtrend scenarios. So hopefully you didn't chase yesterday, and if you got squeezed out, you got squeezed out. But anyway, right back into resistance, and now we'll see, can it hold higher? This is oil. This was the bounce. That's all that bounce was. Everyone said biggest bounce in 25 years. Look where it was, and look where it bounced to broken support that becomes resistance. So now we'll see if it's going to continue at all, because everyone will have their opinion on it. And if it's going to be any good, you would think that you could actually even do your retracement rule here. Retracement rules help you to figure out if there's going to be another move, if there's any kind of commitment to it. And if you go from this low to this high, it's already given back 0.25. Here's your, it's about 0.38. This would be if it's going to continue make new highs quickly, it probably holds this. It could even come into this where the moving average is, which is about 1427, and still be okay to do some sideways work to continue. But anything below this, a lot of just like all the other failed rallies in oil, it could see lower prices. So at this point, though, if you caught that trade on your day 1 when it took back the 8th day for the first time, congratulations. Hopefully you didn't have much overnight, because they trapped some late buyers on that 3rd day. XLE, kind of the same thing. XLE came back, retested a broken pivot, which was all this was, and then opened lower, and it's already, I would say this is your line in the sand there. See if it holds this gap. So down day tomorrow, maybe the XLE is viable. But today wasn't worth your time considering where it came from. Still a broken sector. Your next spot could have been here, but obviously things don't have to rally more, especially in that kind of environment. And once again, just to show you how you don't catch a falling knife and you don't have preconceived notions. These were the strongest stocks with the dividends that everyone loved way back when, and then you had your head and shoulders top. It broke, lost the 200-day. So as an active intermediate trend trader, we usually sell when it breaks the 8 and 21-day. If you waited for the 200-day, you still got out around 92 and you didn't hold your nose and go all the way in below 60. And then you could trade little bounces like that. But that's oil. And that's basically it. The V is turning into a W. Can it be a W with a higher low? Yes. Could it be a lower low? Maybe. Do we gap up tomorrow? We'll figure that out. If we gap up tomorrow and you want it to be long today and you're upset, you know what? You don't deserve to get paid. You didn't take any risk. But with this type of environment where we're still, we've corrected, but it's not that deep of a correction. The S&P itself, I think, is down like 11% from highs. So maybe, and it's obviously above last Monday's lows, and you tend to revisit areas like that when you have such a hard break. The volatility just doesn't go away, and it's good to have the volatility. And by the way, the VIX never went lower on the bounce. So a lot of people in the VTF, congratulations to you, are saying even on Thursday, Friday, like Scott, we just rallied back to 199 in the spiders. Why isn't the VIX coming in? Gave you some clues that volatility was going to stay, and maybe we go back lower. So you connect the dots. And now if you look at the VIX, look, when the market rallied, what did the VIX do? Came in a little bit and stayed right there. And even yesterday, when we weren't sure whether or not the market would break this hard, it closed right at the highs. If this was a stock, this would be your first move, would be a perfect bull flag for higher prices. So, that gave you some clues. Don't be, so jumping out of your skin to be buying such a shallow pull-in. And then if you follow me on the VTF and on my note and disclosures, you will have seen that I didn't have any longs yesterday into today, and even Friday I also just didn't make sense after such a big move. But anyway, at this point, things are going to maybe give you a little bit more leeway to play things both ways. Again, I apologize that I wasn't short coming into today and I didn't press them today. If that's what you do and you made your money, congratulations. Everyone makes money differently. I try here and there, and sometimes I make some shekels, but other times, I like in the past 4 years, I would press support and things wouldn't break, and then I would miss my entry on the long, and then I would be upset that I missed what I'm good at. So recently you've been able to short a little bit more and get a little bit more rewarded. It's been a long time since that happened. But again, being out of the way is half the battle because cash is a position. And lastly, if I got some emails, what do I do with my 401k? If you're 40 years old and you have a 401k, or 30 years old, or even 50 years old, and you put money in every month, I'm sure at some point, it's going to work out and your average cost will be better. I have a 7-year-old. He's got a 529. I'm going to continue putting money in every single month. And this will actually probably help him. Nobody wanted to buy the market and chase it. Now we might actually have a time period where we could cost average in with the time horizon and the market will work for you. But that's different than trading for cash flow and trying to make alpha and getting paid month to month, for a living. I'll see you guys tomorrow. Have a good night.